welcome to the Am I Rich Yet podcast, a weekly podcast for millennials and Gen Zs, where we help you save, spend, and grow your money smarter. My name is Georgia. I'm a Gen Z myself, current MBA student, and navigating my personal finances. I'm one of your co-hosts, and you are listening here to episode 24, where we talk about all things the economy. Yay!
I knew you'd be excited about this. My name's Rob. I'm George's dad. I'm a recently retired financial advisor, and I'm here to help you make smart decisions about your money. And today we've got an exciting subject. But before we get to it, George, you've been in Australia for almost a year. On a first date, what's an absolute no
Okay.
for you with a guy?
Okay, sure. I'll answer that question. They only talk about themselves and they don't ask you any questions.
There you go.
I feel like people say that all the time, but it's true. That happens.
We're back to that red light, green light.
That's a red, yellow.
If they're talking all the time, there's a red light on their forehead.
Yes.
The good, smart guys are really good at getting the woman to do all the talking.
There you go. You heard it here first.
There you go.
My question for you, if you were on a first date with a woman, mom, close your ears, what is a big no-no for you?
I like if they're willing to open up and talk naturally about who they are. If they're superficial, it doesn't work for me.
Yeah.
For whatever reason. So I want them to be at ease. I'd be nervous a little bit, but just to be personable.
Be like a
Not-
real human.
Who are you? Not who do you want to be. So that's my take.
I really like that.
We're going to get started on today's podcast, and today is a bit of an educational piece, and for some people, this is going to be so easy. For others, not so easy. I asked Georgia about the economy because I knew most people in your generation don't pay that much attention to some of the stuff. And that's not a slight, that's just where you're at in life. You got lots of things to worry about, think about, and that's not one of them. What are we going to cover first?
Let's start off with some terminology to set the foundation of the episode. So we're going to talk about terms like GDP, recessions, the unemployment rate, inflation, prime interest rates, trade surplus and deficit, and retail sales.
Okay, GDP.
Let's start off with GDP, gross domestic products.
Okay. So basically what it is, it's a measurement that tells you whether the economy, so it's a value, it's looking at all the goods and services that are produced in an economy. And the economy is either in one of three stages. It's either growing, which is a positive GDP, or it's flat, which means it's not changing at all, or it's negative, it's shrinking. Ideally, you want the economy to be growing. If the economy is growing, jobs tend to be created, new jobs are created, people are getting hired, people are getting raises, things like that. You definitely don't want to be an economy that's shrinking. If an economy is shrinking, that is not good. So we're just going to go through some of the basic concepts.
High level.
GDP, you'll hear it every quarter. How is GDP doing? Is it up? Is it down? Is it neutral?
Yeah, it's pretty much the main indicator of the economy. If someone asks you how the economy is doing and you know which of those three stages your country's GDP is in, amazing.
Right. If you're in a country that's got a positive GDP and it's constantly growing 2 to 3, 4% a year, that's great. Really good. It's like a business. If you're at a company whose business is growing, that's good for you. If you're in a company whose business is flat, not so good for you. You're not getting a raise. And if you're in a company whose business is declining, that's even worse.
Yeah.
Because you might get laid off. Okay. Recessions. What recessions are typically defined as when you have two negative quarters of GDP in a row. Okay? Sounds pretty simple. You have a -2 and a -1.
Yeah.
So everyone gets very fearful of recessions. We hear all this, the newspapers, the media, they love to hop on, oh, there's a recession coming. Well, there's always a recession coming, and people spend a lot of time worrying about that recession. Here's how I like to look at it, though. I flip it around. If we've had two negative quarters in a row, -2 and -1, so we're at 97%. We started at 100, now we're at 97%. Is that really bad? the economy is still going at 97%. It's called a recession, which is supposed to be evil.
Yeah.
If you woke up today and you were at 97%, is that bad? No, it's really good. So don't get hung up in recessions. Now, sometimes you get a deep recession and they can be tough because that's when you start to get job layoffs, etc.
What's a deep recession?
When it starts to get to maybe you've had 4 quarters in a row and they're down 3% each quarter, that starts to become a deeper recession. They go on for a while.
Yeah.
Next up, what's next?
So next we're going to talk about unemployment rate.
Unemployment rate talks about the percent of possible adults 18 and over up to the age of 65. It starts with how many could be working and how many are actually working. And basically, a low unemployment rate is actually good for workers because it means that companies are looking to hire, and companies are also, with a low unemployment rate, looking to look after their employees. So that's good. So
incomes rise.
Exactly. So in the US right now, they've got a very low unemployment rate. Regardless of what the President of the United States says, the US is doing pretty well because of their low unemployment rate. Canada's isn't quite as good right now. We've got a higher unemployment rate, but it's still not horrible. It's only 6%. So it's not a horrible unemployment. When you've got a high unemployment rate, that means there's not a lot of jobs out there. People are looking and people are losing their jobs. So that's never a good thing. Next up, inflation.
Next, inflation.
Inflation is simply the price of goods going up, and they have different ways of measuring it. Don't get hung up on that. Historically, inflation has been 3% a year, 3.1. Right now, it's a little bit lower than that in Canada. It's a little bit higher than that in the US. But we're within that range. Anything within a 1% to 4% range is pretty good. When it gets up into 5, 6, 7, that's when it's troublesome. Prices are going up too fast. Everything's expensive. And we went through that after COVID. And we had to raise interest rates to cool everything off. So that's inflation. Let's go to interest rates.
Oh, okay.
So the prime interest rate is basically what the government sets the prime rate at, and everyone follows suit. Then you got the bank prime, which is a little higher. And then it's what can you invest your money at? That's a little higher than that. And then it's what can you borrow money? And that's going to be a little higher than that. So the safer the institution, like with bonds that we discussed, the lower interest rate they're going to charge, the riskier, the same applies. It'll be the riskier, the higher the interest rate. If you're looking for a loan and you're really solid financially, you're getting a better deal than someone who's not as solid, who has only one income family, whatever it may be. Okay, so that's interest rates. What's next?
Next is trade surplus and trade deficit.
So this is quite simply the difference between a company's exports. Country. Did I say company?
You said company.
Okay, country. Their exports outside of Canada. So Canada is selling goods around the world, or how many goods are we actually importing? And the trade surplus is the balance between the two. Ideally, you want to be exporting more than you're importing, but that doesn't always apply. So, what's going on in the States right now, they're worried that they're importing too much. The reality is they've got the strongest economy in the world. They've got the lowest unemployment rate, so it's kind of fake news. But anyways, that's the trade surplus. And what happens is governments will go out and try and cut a few trade deals to get their surplus and to get it better balanced. You don't want to be in a big deficit position. You're importing everything. That's
Right,
GDP.
GDP you look at every 2 quarters.
Or every quarter. You get the quarterly number.
How often are you looking at trade surplus and deficit?
Same thing. It gets reported every month.
And then the trade balance is the difference.
What's next?
Retail sales. Talk to us about that.
It's a sign that the economy is working. If your retail sales are positive, whether it's online or in store, that means things are good. Consumers are buying things. They've got money and they're buying things. So as interest rates come down, what you'll see is consumers open up their wallets a little more. If things are tight in the economy, they don't open up their wallets. They don't shop as much at Christmas, things like that, over the holidays. They won't travel as much. That's never good for an economy. So those are the simple things to pay attention to. Do you need to do a deeper dive? No, you really don't. Just understand what those basic things are. You'll hear them reported, and now you know. Okay, and I know a lot of the audience already knows some of this stuff. Some of you are just out of school or a lot more recent than myself, so.
But I mean, that's been an obstacle for us because our youngest listener in the Gen Z group, I think, is somewhere around age 13 to 14, and our oldest is in their mid 40s. So yeah, we're covering a broad group. We got to cover everything.
Okay, so now the interesting piece. This is the golden nugget.
Okay.
When I started in the industry, I used to think all of this stuff was really important. And throughout my career, I paid attention to it all. But what I've learned is that it should have next to no impact on your investment strategy. You can't predict what these numbers will look like in the future, whether they're going to be good or bad, and you can't build an investment strategy around any of these numbers. In other words, just because a country's GDP is growing, it doesn't mean that's a good place to invest. Everyone would think it would be really a good place to invest, but the math never lines up. The evidence is it really doesn't matter. At the end of the day, it's all about the companies. And the companies in the economy are completely different.
Right.
So where a lot of investors struggle is they'll go, the economy's doing well, why is the stock market down? Or vice versa. The economy's really struggling, why is the stock market booming? One is looking at the past. So all of the numbers we went through are looking at the past. What's inflation been? What's GDP been?
Yeah.
What's happened in the rear view mirror? Whereas the stock market looks forward. And the two never line up. Some years they line up.
Right.
Some years the economy's good and the stock market's good. Other years they're completely opposite to each other. And that's more often the case.
Okay.
So don't get caught up. You know, people say, well, the economy's not doing well, now's not a good time to invest. No, don't think that way. That's where you're starting to make the first mistake.
Okay.
Get invested. Don't worry about what's happening. If you're properly diversified, you don't have to worry about which country's got the best GDP or the lowest unemployment rate.
Yeah.
All you care about, you own all these businesses around the world, and all you care about is, are they growing? That's it. Are they making profits? And they will.
I think it's still important to be aware of the economy when you're choosing these things, but what you're saying is don't let it guide your decisions. Awareness is helpful in any situation.
I can't tell you how many times a client would come into the office and say, Rob, I'm really worried about you.
Yeah.
Every quarter, there's something new to worry about. Mm-hmm. I'm really worried about Canada. I'm really worried about the US. And all I can tell you is every time you're worried about something, you think you're the only person who's worried about it. Mm-hmm. It's already front page news. Mm-hmm. That's probably where you got it. And the market is already way ahead of you. The market is forward thinking. And it's tough to understand that. Once you understand that, you realize you can't predict it. Once you realize you can't predict the market, life becomes so much easier. Investing should be simple. It should be boring. It doesn't need to be, oh, the GDP is up. Oh, there's a storm out west. You know, wheat prices are going to rise. Like, no, stop all that. That's just noise. You will not do investing if you follow that. My take.
It's hard to hear that and believe it when you haven't lived through it yourself. And I think maybe a lot of listeners and viewers might resonate with that. I'm hearing you say that and there's conviction in your voice. I hear it and I believe it. I do because you're my father. But I think it's helpful for listeners to know that too, that it's okay if you're not totally bought into it. It's hard to believe something when you haven't gone through it or experienced it yourself. But that's why we're creating this whole podcast, so that you're giving out knowledge that you've gained over the last 30 years. And whether people want to take it or leave it, it's up to them. But you're in the position you're in for a reason.
Yeah. It takes you a while to figure it out.
Yeah.
I used to believe, you take the first 10 years of my career or whatever, and I believed that active management worked. I believed that I would listen to these really intelligent people saying, oh, this is what's going to happen to these companies and this economy. And it had no relation to what actually happened. And they may have predicted something, but that just because they predicted it, it didn't impact the portfolio.
Right.
And because if they were truly able to predict things, they should be beating the market all the time. And no one does. So we have some questions. Let's go through them.
Great. We have two questions that we're going to read out. The first question is, focused on the Canadian market. With so much global change, how are these shifts specifically impacting the Canadian economy?
I'm a financial advisor. I'm not an economist, and I have to be honest there. It's certainly impacting it. We're seeing trouble with couple of our main exports, with oil and gas. We're seeing problems with the auto industry, so that's having an impact. We don't even trade well within Canada. We have barriers trading between provinces, so we need to figure that out first. And then we're going to cut trade deals. Trump is negotiating. He's not, who knows what he's trying to do, but at the end of the day, he just likes a deal. He likes to think he got a deal, and then he can say it's my great big new deal that I've signed. And at the end of the day, it really doesn't mean that much. It doesn't. But we need to figure out first how to trade fairly within our country. That's important. We need to put money behind infrastructure. We need to build pipelines. We're an oil and gas country. That's what we are. Next up.
Yeah, this next question, it's from another good friend, a really smart girl in my MBA. She could take any company, become their CMO, and take that company to new heights with her marketing skills. Anyways, the question here is, I want to know where to get my financial updates and news as a young person who can't really afford a $200 Bloomberg subscription.
I wish Bloomberg was $200. It's like $250 US now, so it's closer to $350. I still think that's a great investment. I get the Bloomberg every day, and it is wonderful. I get a quick take in 10, 15 minutes of what's going on in the world. And for one that is still available is called the Daily Upside. It's a free newsletter. It's not quite as in-depth as Bloomberg, but it's really good. And we'll give you every day an update on what's going on with the markets, what's the headline news related to the financial world.
Yeah.
So I think that's good just to stay on top of what's going on. It's like any newsletter, you get it online, you can scan through it quickly. Some days it's 5 minutes max, other days I actually read in depth some of the stuff. I find that helpful.
I was going to say too, I mean, we're going to have different opinions or different options because this podcast comes from a Canadian lens. People in the US might have different ones, but a hack I thought of also is to ask your boss or your manager or your colleagues what subscription they're getting, and then ask your company too expensive for you because you want to be a smarter employee.
There you go. I like that hack.
Keep going.
Next up is Visual Capitalist, a great Canadian company.
Yes, I love this.
They take longer term trends and make it visual. You get one, literally I get some of them every day, and they're amazing, easy to understand, and you'll get a sense of what's going on.
Yeah.
And a lot of the stuff that you thought was X turns out to be Y when you actually see the data, which is kind of interesting. And it's free. Now there's a paid version, but the free version is excellent.
Yeah.
The last one is in Canada, the Globe and Mail is still, for business, is still probably the best newspaper. Online, I know your generation doesn't get newspapers, I understand that, but you can get an online subscription, 99 cents a week right now, promotion. It sounds like I work for them. I don't. It eventually goes to $1.99 a week. Now think of what you spend on a coffee, right? So if you can get some of your education from that, it's worth it. Do I spend an hour and a half reading the Globe? No, I might spend 15 to 20 minutes max.
Yeah.
But if you want to stay informed, those are some reasonably priced or cheap versions.
Yeah.
What are our lessons?
We can conclude this episode with some lessons. Well, as a citizen of a country,
Yes.
it's important to understand what these numbers are and to have some awareness on your country's economy and ideally countries around you.
Yeah. Makes
That's
sense. I agree. No, you're going to go vote. You're going to vote in an election. These are often the headline subjects that are brought up. You know, inflation and housing prices and all this sort of stuff. Be a little informed so that you can make a better choice when you're voting.
What's lesson 2?
When it comes to your investments, ignore all that stuff. Ignore the politics, ignore the economy. Stay globally diversified, and you don't need to think about all that stuff. It just simplifies everything. Yeah. I was able to literally stop going to hear all the managers in my career. For the last 20 years, I haven't listened to a single money manager talk about how they manage money. And that gave me freedom to do better planning for my clients and stop confusing my brain with 32 thoughts. What's up next week?
Next week is another rapid fire question episode where we answer these outlier questions that didn't fit into our 12 main categories. So it's going to be a random question episode, and we're excited to go through it. Thanks again for being here for another episode of Am I Rich Yet?
Don't forget to, if you really like the podcast, subscribe, share it with friends, or send us some comments. If you've got some questions that you'd like us to answer, send them in.
Totally. Give us some feedback. We'd love to hear it. Thanks again, and we'll see you next week.